Hello, traders. It's Wednesday, October 12th. We're about an hour before the close. I want to do a follow-up educational video on a piece that I did last Friday. Super, super important. I think you're going to love this content. I think it's really going to resonate with you. Let's take a look at the last pick that I had. It was SNOW, and it was a video that I just put out yesterday. And here's the price action. I said to short it on the open. That stock from that opening print dropped $10. If you stuck around, you shouldn't have. You should be taking gains of that magnitude right away. Do I still like the short? Yeah, I like the short. I wish it didn't bounce as much as it did. The market's also chopping back and forth. So if you've got an opportunity to make 10 bucks in about a half an hour, my God, you should take that. So what was the clue on this drop? This is a short, stupid type of move because we were breaking a D1 uptrend line. I showed you that. That's one of the reasons that I liked the pick. So you come in and you're like, oh my God. 5 minutes in, you're thinking, Pete nailed this one. I'm going to get short. Okay, well, you can see stacked red candles. If you short it in here, it's okay. If you short it in here, it's okay. You have to short stupid on this one, but you need to be out right here on that bullish engulfing candle right here. That's when you take your gains and you get out. You wait for your next opportunity. There was an opportunity later in the day where you had this upward sloping trend line that started to fail. The stock had a little relative weakness. So if we go back and we take a look at what this stock typically does, we'll just zoom out to a 15-minute chart. You can see down, way up, down, up. Look at these big choppy moves. So you can tell that this stock moves around a lot. That means that you can't just hang out on it. Let's take a look at the market and see what it's done. That is going to be the key to today's lesson because I want to go back to Friday's lesson when I showed you a gap and go formation. Many of you watched that video, you commented on that video, you got super, super excited by that video, and that's good because it is a good pattern to trade. In general, gap and go formations are fairly low probability. They are not something that you want to aggressively chase. But this one shaped up really, really well. And the reason for that I explained in the video Friday. The reason for that is that from this close right here to this open right here, that is a gargantuan move. Huh. Leaves most people wondering, is there any more gas left in the tank? Is this thing going to drop any more than it already has? Well, yes, now we start stacking long red candles. When we see this pattern, you can short knowing that the low of the day is not in because these sellers are pounding, 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 smashing, killing, crushing every bid that's out there. Buyers who have their bids layered at this price and then lower and lower and lower. Before they get filled on those other orders, they start canceling them. They're like, whoa, this is heavy selling. I'm going to get filled at a much better price. So cancel them. That creates an air pocket. Heavy volume consecutive stacked red candles. So then we get this nice little bounce in here. You're always going to get a bounce on a gap and go. You could have a gap reversal, but you're going to get a bounce because look at the magnitude of this move from the close here, the prior day, to the leg and the low right here. So the low of this first leg down, that price to that price is monumental. So what? What does that mean? That means that if you were short up here overnight, if you were short here, if you were short here, at some point you are going to want to lock in those dang gains. It also means that if you were short down in here, you're probably nervous as all heck that there might be a bounce because that is a big move. So you get this little short covering bounce. Typically, when these bounces are very brief and very shallow, you're going to get instant follow through selling, hence your gap and go formation. So on this little bounce, if you were trying to short and you're like, oh, bearish hammer short, it's okay if you didn't pick the perfect entry because this is not the low of the day. So you know you'll have a chance to cover that short at a better price. This would not be a bad short either, even though it's higher than this, because you know that this is not the low of the day. Come on, Pete. Seriously, how do I know anything? Well, you don't. What you do know is you know probability of success and you know patterns that have that high success rate. And when you get these consecutive stacked long red candles, they are a sign that sellers are in control and they are relentless. They are relentless. They have positions to adjust. Oftentimes there's some kind of news that changes their sentiment. Whatever their reasoning is, these candles are not here by mistake. They are there because sellers are smashing everything that's in the way. And that is what gives you the confidence to short a little rally. But you must have this exact pattern. Heavy volume, consecutive, very little overlap, very little retracement back into these candles. Then and only then can you say, yeah, this is a gap and go formation. Downside, I've got my stacked red candles. Anywhere that I short in here, it's probably going to be a decent short. I can continue to add, knowing that this low is going to be tested at some point in time. You could even get out here. If you shorted here and you shorted here and you got out here, you're a happy camper. But by the time you get this new low of the day, you're like, well, let me see if I've got any follow through selling. If I immediately have a bullish engulfing candle, then I know that this is just a head fake to trigger sell stops and shake these traders out. But if I have follow through, then I know that this breakdown was legitimate. And that's exactly what you had. Is you had follow through on that breakdown, you could ride your positions, you would have made a lot of money. So the table is set. Oh boy, Pete has taught me this great lesson. He said that when I get a gap down and I have red candles that I can short because I know that the low of the day is not in. So, man, I can't wait to see that pattern again. And so you're watching the market and you're waiting for that type of setup to happen along. And then lo and behold, you get that beauty right there. Oh, yeah, this is it. Look, red candle, red candle. I love it. Another red candle, another red candle. Oh, this is great. I'm going to short the bejesus out of this. Ha, rally. That's okay. Because Pete told me that this is not the low of the day. This is not the low of the day. I'm going to see this low of the day. I need to just keep adding with confidence. And I know that I need to weather the storm because he told me on these stack candles and gap and goes that I'm going to have to take a little bit of heat. I can take the heat. It's all good. Here's the problem. This is not at all the pattern that I described. Well, what do you mean it's not the pattern? Look, consecutive red candles. Do you see these wicks? Do you see these tails? If you were short in here, you had to weather that bounce. Oh, geez. Oh, God. Here we go. We could take out the opening price and go right into the gap. No, no. Market settles down. Long tail. Another long wick. Look at the retracement that you have into these prior candles. This is not the stacked formation that I had mentioned to you. This is actually a pretty weak sell-off. And when you get these, mind you, the drop from here to here is big. And so buyers are nibbling. They're coming in and they're buy, 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 buy. No, no, no. Selling pressure is still too heavy. Buy, 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 buy. No, no. Sellers are still there. Oh, here we go. That's a nice bullish hammer right in there. This is a nice bullish hammer right in here. Okay, you know what? These are signs of support right in here. I need to be careful if I did short anywhere in here or if I carried overnight shorts. I got to be careful and I got to take profits in here. Why? Because Pete told me to expect bounces because the distance from the closing price to the low of this first leg is dramatic and it's going to attract profit taking and it's going to attract some buyers. Okay. Eesh, gosh, I messed up. but I shorted in here. That's okay. I'm ready to weather the storm. Oh, what? Where did that long green candle come from? That's not supposed to happen. And you would be right in that assumption because when you have those gap and go formations and you have those stacked red candles consecutively, very little overlap, heavy volume, that type of selling pressure tells you that sellers are in complete control. They are not going to let the market come up for air because they have sell orders to go and they got them in size. And you'll never see these types of green candles because blam, 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 they're going to send it back into oblivion. And you'll never see a rally like this. You will very rarely challenge the open of the day. And the high of the day is typically in the first bar or two, and it never looks back. That's how you know you have a bearish trend day. So if you see a candle like this, I don't care where you shorted. I mean, now we're into the gap. Uh-oh, that is very bullish. Long green candle like that, yowzer, that is very bullish also. I would be looking for half of this candle to be preserved if I were a buyer. And looky there, tail, tail, half of it's preserved. I see this, I'm thinking, man, this thing's going to go. It's going to fill in this gap at very least. And so we continue to roll forward. And yes, look at that. Now we get some follow through in here. Whoa, now we're starting to look really bullish in here. Things are going really, really well. Oh God, another long green candle. Now this green candle here has just filled in the gap overnight. And now we could even be challenging this resistance level here. So now we want to watch this long green candle, the halfway point. Okay, that's compromised, that's breached. Are we going to get through this open? Well, we try. And then a long green candle off of it, and then a long green candle here. So no, this support is holding. We're going higher. And it's not until later in the day yesterday when the market actually did show some signs of weakness. And eventually you could see that here, long green candle, half of it's violated. That tells you, okay, we might have seen a high. We've got a bearish hammer off the high of the day, not going anywhere, mixed candles in here. Okay, so I'd like to see the open of this candle taken out. Ah, there we go right there. That would get me short right there. That plus that plus that would get me short. And now I want to see the open of this red candle preserved if I'm short. Well, we had some news that came out. You can see how that opening was preserved. Couldn't get through it, couldn't get through it, couldn't get through it. And then you have some news that hits. Folks, this is what I'm talking about right here. These are stacked consecutive long red candles with very little overlap on massive, massive volume. You can short that here, you can short that here, you can short that here, and you still would make money. Bullish hammer, take gains. Will this continue lower? Yeah, it certainly could. Certainly could. But you'd want to see not much more of a bounce than this, and you would want to start seeing some follow through selling. Then, yes, you could stick with it. You can see that the 1OP indicator was starting to have a bullish cross, so that would be a warning sign for you. Nice bearish cross in there. So the point that I want to make is Mark Twain said it very eloquently. He said that a cat that jumps up onto a hot stove will never jump up onto a hot stove again. For that matter, he won't jump up on a cold stove either. He just flat out doesn't like stoves. Well, the same would be true for those of you who came in, you're all hot and worked up into a froth because you thought you saw something here. You thought you saw the pattern that Pete had outlined for you. And traders will often see what they want, not what is actually there. That is a green candle, is it not? Yes, it is. That's not a consecutive red candle. This This right here, this is massive overlap. This candle almost went through the halfway point of the opening candle. Yeah, it had a nice tail underneath, but this is massive overlap. This is not the pattern. You'll also notice that the volume during the early part of the day was what? Low, very low. And when we compare volume, I don't compare volume to what the volume has been over the prior 10 periods. I compare what is the first 5-minute bar in terms of volume and what is that 20-day average volume. How about the second 5-minute bar? What is the average daily volume for the last 20 days for this specific bar? Now I have something that I can actually compare because, of course, the first hour of trading is going to have more volume than the second hour of trading. So that's not relevant to me. But what is relevant is how does that first hour compare to every other first hour over the course of the last 20 days? In this case, you can see this is a little choppy, light volume decline with lots of overlap in those candles. This is not the bearish trend day. This is not the pattern that I had described. And in fact, because of this stubborn move lower, it tells me that buyers are in there. If I see that bullish hammer and I see that bullish hammer, I'm a pro. I'm going to buy the living bejesus out of that formation on that bullish 1OP cross, and I'm going to ride it as long as I can. I'm going to see what happens right in here. If I get that, I'm keeping an eye on the halfway point. Aha, it survived. And I'm going to ride that. And I'm probably going to be getting out somewhere in here once we start to close that gap from the prior day. I'm going to be taking gains. I'm trading on the contra side of a longer term bearish trend. So I'm going to be more passive with my bullish trades. I'm going to be more aggressive with my bearish trades. I would be more aggressive shorting up in here because when I have a short setting up, I'm getting on track with the longer term trend. And if I didn't do anything in here and I didn't do anything in here, I'm looking for an opportunity to short, and then I get a nice long candle like that on heavy volume. I see another candle that's starting to form like this in the middle of it somewhere, anywhere. I'm going to be short up in here. I don't even care what the news is. I don't have news feeds. I don't use news feeds. I just watch price. I got the heavy volume, and I'm starting to look like I'm going to stack some red candles, and I have a bearish longer term market. I am short. And I get a bullish hammer in here. Thank you very much. And I would be much more aggressive on this short than I would be getting long down in here. When I give you a pattern to look at, and I say it has to match exactly, it has to match exactly. These are the types of stacked red candles on heavy volume with little to no overlap that you see consecutively that are worth trading. They are worth selling or shorting stupid. So I hope that this video helps you distinguish one from the other. Know that gap and go formations are very difficult to trade. Once that initial move has been exhausted, that's a big move from here to the low here, you're going to see some buying. Thanks so much for watching. Let's see, TMUS was the pick that I was going to highlight. Let's do that real quick. I know a lot of you like to watch the videos because you always get a pick. And I'm using Royal Flush Bearish. That means that these stocks have a bearish trade signal across every time frame from 5-minute to a D1 chart. So what do I like about this particular short? Well, first of all, and most importantly, if I draw this upward sloping trend line right here, it crosses at least 5 different points. And when that trend line is breached, it will take out the low from today. So the caveat to this trade, and expect choppy trading with this guy, because look, it's up, it's down, it's up, it's down, it's choppy all over the place. So when these trend lines are breached, yes, I think when that trend line's breached, it's got a path to the 200-day moving average. Stock doesn't move much. It has fairly low option implied volatilities. What else might I like about this stock? Well, if I look at this particular search today, you'll notice that I have VZ on the list. Huh, T-Mobile's in the same space as Verizon. Look what Verizon's done. Nasty, nasty selling. A little while ago, telephone was on that list too. AT&T, also a cell provider. Nasty selling. Maybe T-Mobile is starting to cave in to some of that same selling pressure in that same group. I'll know if it makes a new low tomorrow that it's very likely to test that 200-day moving average. That's why I like it as a short. I'm not jumping up and down over this short, but it looks pretty good, especially if it can breach that upward sloping trend line. Right now, you've got a lot of stocks that are just absolutely crushed and they're being sold hard. So they're inching their way lower. Let's take a look at one thing. I want to make one parting comment. Microsoft, Google, Amazon, all pretty nasty, all starting to see some selling pressure. When the really big stocks, the really big names start to see selling pressure, the really solid companies longer term, then you know that you're probably getting close to a short term support level. As I say, the baby is getting thrown out with the bathwater. That would be that type of case. There's nothing that you can really latch onto. It's just kind of a feel thing. The same thing I've said when the market was in go-go rally mode and it was pushing higher a year ago. The dogs are barking. Well, what does that mean? When you see the laggards participating in that final push of the market move higher, you know that things are getting pretty overextended. And that's usually a good time to watch for a shorting opportunity. Same thing is kind of true on the downside. When the really, really solid, strong stocks start to get hammered, then you know that you're getting pretty close to a support level. So watch for that. You don't have to trade it. You should still be favoring the short side. I'm hoping that we see some type of capitulation low in here. We've got earnings season coming in. So until I see something I can really sink my teeth into, I'm just sticking with day trading for right now. The moves have been great intraday. There's no reason for me to take overnight swing positions. I can't justify having that overnight risk when I've got big intraday moves. Boy, we got to take a final look at the market today because I haven't even talked about that. So you get lots of big moves yesterday. Big run up yesterday, big move down today. This is a wide range. That means that today is probably going to be an inside day. The low from yesterday and the high from yesterday are going to be preserved. We've got an all important number coming out, which is the CPI tomorrow. We also had the FOMC minutes today. So we had all sorts of important news. That means that on an inside day, people are going to be waiting for that news, and we're likely to kind of chop around. So, not much going on in the market. So, be careful. Know what type of day you're trading, know what the factors are, and then when you come in, if you're expecting an inside day and hey, people might be waiting for those FOMC minutes to be released, which by the way, the Fed has been so frickin' vocal. How are they possibly going to impart something in that FOMC statement that's about a month old that they haven't just told you in the last day or two or week? There's nothing new in it. And so you wait, and you get all this choppy price action, mixed candles back and forth, tight range. You start to see this in the first hour of trading, you should automatically be right into defensive trading mode, which means I am not going to trade unless I see something really, really compelling. And that would be a good decision because you would get chopped up on a day like today. So knowing when not to trade is just as important as knowing when to trade. I hope these tips help you. Please post your comments. Please tell other traders that you know to visit my YouTube channel. I know I can help them as well. Really would love to grow this channel. Thank you so much for watching. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.